All right, big trading day today. Sorry for the late recap. Just got back home, so gonna try to recap this trade I took today. Definitely a great. I feel like this was one of my better trades, one of my best trades I've taken. Definitely information packed. When I show you my charts, it might be a little bit overwhelmed, but I promise you, everything that I have on here was a confluence after confluence after confluence, adding up to each other, and eventually leading up to, in my opinion, an A plus trade. So a lot of, I feel like, very, very good information, a lot of lessons here in this trade that I'm excited to learn from, because I've honestly learned from recapping my trades as well. And so hopefully you guys learn something from here as well. So let me switch my screen into this recap. And then let me show you guys, just get the proof out of the way, because I don't, just like to do it. So 50K combine here. Um, doesn't say my RPA and L because today is technically like the new trading day. It's 8 p.m. Central Texas time. Today's daily candle, today's Wednesday, but Thursday's daily candle already started 2 hours ago. But here's the proof. So it says March 26th, 700 or 386 for our first take profit, and then 706 for our second take profit. So 1096 is our full take profit for today's trade, which was a 1 to 5.5 RR trade. So pretty decent, solid trade. Yeah. Okay, so let's get into the market recap. All right. Today was, I feel like, a great example of how top-down analysis can save your trade, can kind of give you a great entry. So, and obviously, this price action was great today. It's not going to happen like this every single time, but it's days like this where you have to just make the most out of it, and that comes with recognizing it and recognizing the models and recognizing your confidence. And I feel like that's why it's important to continue to learn and experience market conditions like these, right? So come in today for our daily bias, or actually before that, I upped it one. I one upped it today. I used to start with daily. I recognized our weekly market profile. So where Monday made a high, right? It pushed up higher. Tuesday pushed up even higher, and then because of that, I was already expecting for Tuesday yesterday to make to react off this weekly imbalance, right? We're in a higher time from PDRA. We're in this weekly imbalance, this gray box. So honestly, yesterday I was expecting a bearish day, but that didn't happen. And so what that told me was we were getting manipulation, right? Because obviously everyone's going to be a little bit bearish because we're in a weekly imbalance. Who wouldn't be bearish when we're in such a higher time frame imbalance? And because of that, we're manipulating price. We're taking out stop loss orders, stop hunts, and that kind of just gave me more confidence that Wednesday would be our expansion, would be the start of our down move. And that's exactly what it was, right? And so extra confirmation on that, aside from this daily SMT. So this daily SMT was our first big confluence that today would be bearish. Our second confluence was that I always mark out new days, right? So Tuesday, 2 days ago, yesterday, when yesterday's market closed and today's daily candle opened, what do we get? What do we get right when today's daily candle opened? We get a manipulation. Like, we get manipulation, and we manipulate Tuesday's highs. We manipulate Tuesday's highs, and what is this specifically? This is specifically doing. What this specifically doing is we're creating today. We created here out today's daily wick, right? So this small wick here, this daily high wick that took out yesterday's high, was this on the 15-minute. And what is that saying? That's manipulation here. And because we're accumulating bearish order flow for the rest of the session, we don't touch this at all. We don't even test it. We continuously have bearish order flow. And that's more of a confidence that we're going to be bearish and we're not going to touch this high ever in today's session. And that's exactly what we do. So that's another confidence. So that bearish SMT, we get a manipulation leg. In addition to that, this is our final higher time frame kind of confluence. I go on the 4 hour. I mark out a 4 hour PD array. So this low to this high. And now I zoom into the 1 hour because this is the 1 hour. Yeah, it's the 1 hour because time frame alignment. When you're looking for market maker models, go from the 4 hour, zoom into the 1 hour, or what's the 15-minute? Either one, 15-minute or 1 hour, and then we look for a potential market maker model. And that's exactly what we get. We get original consolidation, we get accumulation 1, accumulation 2, and then here is our smart money reversal. After taking out this high, manipulating and creating our daily wick, we begin to sell off, right? And right before market opens, that's exactly what I'm expecting. I'm expecting this this buy side of the curve to be filled in and for us to sell off this session. That's exactly what we do. So that's our higher time frame analysis. On the lower time frame analysis, we get a 15-minute SMT, another 15-minute SMT, and then we get a 5-minute SMT. So 3 SMTs, bro. 3 SMTs. I feel like honestly that's pretty rare, and that's honestly I feel like just going off of these SMTs, you could have won the trade. You could have been bearish today. But you know me, I like to have multiple confluences, so I like to have multiple things that kind of confirm what we're gonna do today. So now I'm looking at the 5-minute. I love looking at the 5-minute. I love looking at what the 5-minute is going to tell me. Why? Because it gives us a perfect unicorn model for us here. So here we get our stop hunt, right? Stop hunt here. That's the first thing I look for. I look for a stop hunt because that takes out liquidity, that takes out buy orders. We get a stop hunt, we get a high, we get a low, a higher high. Our breaker block isn't valid yet, and then we get a lower one. That's when our breaker block is valid. So that's when I can mark out this entire thing as our breaker block, and that's a point of interest, kind of a point of attraction. In addition to us making our 5-minute change in the state here, in addition, we make a 5-minute fair value gap. So I know that was a lot. Let me recap it. For our unicorn model, you need a stop hunt. You need a breaker block, which is what we got. High, low, higher, low, lower, low. This makes it a breaker block. We also need an imbalance. 5-minute fair value gap. Also need, it's good to have a market structure shift, a change in state, which is what we get after we close below this up close candle. So perfect unicorn model. This right here is a perfect unicorn model on the 5-minute textbook. So now all we're doing, in addition to those SMTs, is we're waiting for price to retrace back into our point of interest, which is here, ideally in the macro, right? I do not, or not ideally, it must be in the macro. I do not take trades before the macro. Why? Because as soon as market opens, let's look into the 1-minute. How do you know what price is going to do when it looks like this? When it looks like this, how do you know what price is going to do? Because honestly, you could have thought, I saw a couple people on social media, I saw multiple people actually on social media take longs today. Why? Because we have a perfect unicorn model on the 1-minute. On the 1-minute, it's very, very reasonable to take a long here. We get a stop hunt here. We push higher. We get a high, low, lower, low, higher, high. No, low, high, lower, low, higher, high. Sorry, I'm tripping. So we get our breaker block here. We have a 1-minute fair value gap, and we're respecting that 1-minute fair value gap. So you could have entered here. You could enter long here. You could enter long here. So how are you supposed to know whether price is going to head higher or head lower? Well, go on the 5-minute. You sit on your hands, you shut up, and you wait for the Judas swing to finish. That's exactly what we do. In addition to that, it obviously helped. That's why it's important. So it's so important. So first, you don't trade market open. You wait until the macro happens. Second, you get your pre-market analysis. You make your pre-market analysis, and you have sort of a bias already ready to go. And today's bias for me was correct, right? Because this was my point of interest. So I knew that even when price delivered higher here, that we would most likely reject, right? And as soon as we got the rejection, that was like my last sort of confirmation that we would be bearish today. But for people who are bullish, that could have just been their entry, right? Because they didn't have their pre-market analysis marked out. But also, just because I have pre-market analysis marked out doesn't mean that's going to be right. Again, you have to be reactive, very adaptive to what the market wants to give. That's why I had so many confluences, and that's why I waited for the macro to happen, because I wanted to be sure that my bias was correct. So wait for the macro to happen. At this point, I'm getting a little bit of FOMO, right? Right when this happens, right when market opens, we dump. I'm getting a little bit of FOMO, but we retrace back in. But I don't enter here. I get a little bit more FOMO here. But why don't I enter here? Well, because it's not in our macro. And patience, again, pays off. Why? Because we make a breaker block here. And that's just more confirmation. We get another change in state. We break more structure in the 1-minute. Why not just wait for more confirmation, bro? Why not just wait until you have more confirmation, right? Without missing the trade, because it's not in our macro yet. Just wait until you get more confirmation, until you're more sure. Why risk entering here when price maybe, obviously we got lucky today. If you entered here, maybe could have just pushed higher. We're not lucky, but there's a possibility of price always just going against your bias. So why not wait for more confirmation? That's exactly what we did. So we get change in state on the 1-minute breaker block, and right as soon as the macro hits, we tap into that breaker block area. That's where I enter. Perfect entry, perfect fill. Stops above that previous swing low, previous swing high, previous swing low, and I take my partials. I showed you guys the proof. I'm pretty sure I take my partials at this low. Pretty sure that's the London low. Yeah, equal low. Final take profit at this point of sell side, and that was 1,096. So yeah, pretty good trade today, and our weekly market profile played out, right? And what I'm expecting for tomorrow is, honestly, if price were to expand and we were here today, I would be more confident in Thursday, so tomorrow's session, to dump even lower to fill in this end log. But we filled in this end log in one day. This was a crazy move, a big dump off today. So honestly, I feel like price could have a midweek reversal. That is another expansion. I would highly, highly recommend looking into the weekly market profiles because they help a lot. That was a big part of why I won today's trade, was because of that. I was able to anticipate a bearish day. So a weekly reversal, midweek reversal market profile is Wednesday makes our low, and Thursday and Friday is just expansion higher. Because we have a expansion higher, we get a retracement kind of make our low, and then we midweek reverse essentially, and we just go higher, right? So yeah, that's what I'm expecting kind of for tomorrow. If that doesn't happen, again, it's very, very up to what the overnight session does, all the way up to right before market opens, because we're being reactive, adaptive to what the market gives us, because it doesn't care what we want, right? So just always look for what the market wants, and it's telling you. So yeah, I think today this take was a lot faster than the other ones. I think the other ones were a lot more over the place and just not as good. But yeah, I think I covered everything. So final summary, I'm gonna go through a final summary just so I feel good, just so I feel like I've gotten the information out. Hopefully this summary doesn't confuse it more. Okay, let me try this. So start on the weekly. I understand. I'm not gonna go over the weekly market profiles again because I'm tired. I know you're tired of hearing that. Got my weekly market profile down. Got my daily bias. Got my daily confluences down. This external SMT. 4 hour marked out that PD array. Understood that we were in a possibility of a market maker sell model. So that's already 3 confluences. 15-minute. Get 2 15-minute SMTs. 4 confluences. Oh, I forgot. We had a manipulation wick here. And to confirm that that was indeed a manipulation wick, we didn't touch that at all overnight. We just continued to make bearish order flow. So that's actually 5 confluences already before we even head into the 5-minute. So 5-minute, we get 2 SMTs. So that's 7 confluences. Almost forgot. This 15-minute Ferrari gap was being respected. So bearish imbalance was being respected. So that's actually 8 confluences. And then we get a 5-minute unicorn, 9 confluences. Change in state, 5-minute, 10 confluences. 5-minute inverse Ferrari gap, 11 confluences. 5-minute Ferrari gap, 12 confluences. We have 12 confluences before market opens. That's exactly what you should be looking for, or obviously not 12, but this is what you should be looking for, just stacking confluences and making and being ready for an entry, right? I'm not going to say making a bias, because your bias could always be wrong, but being ready when the opportunity presents itself, right? So always being ready. And the way you're ready is by building up confirmations and confluences. So yeah, 12 before market even opens. And obviously today was a very, very good day for price action. And one thing before I end the video is the biggest thing, if not I learned from blowing my last account, is I think the biggest reason, because I made the first day I posted this trade recap, I made 1.2 on the first day of their eval. That just completely fucked it up, right? I completely fucked up my emotion. I thought it was right. Futures was just the holy grail, right? I just expected to make money the day after that, keep on making money, and that's obviously not what happened. So I feel like coming off of winning days is just as important as coming off of losing day. Honestly, I feel like it might be harder for me personally, on a psychological level, to stay composed and calm on a winning day rather than like a 5-day losing streak. Because I feel like I'm more vulnerable to FOMO, fear of missing out on trades, and just wanting to see green. Honestly, I know it sounds dumb, but that's just something I've been working on. I feel like if I hadn't blown that account, I wouldn't have really learned this lesson. And yeah, I'm low-key thankful that I was able to blow that account. So I was able to learn this lesson. And I feel like that was, honestly, might sound corny, cringe, whatever, but I feel like that kind of pushed me, get me a step closer to everything just clicking. Because as you can see, I feel like my technical analysis is pretty spot on. I'm reactive, I'm adaptive. It's just controlling my emotions. And I feel like that last account being blown was literally a step closer to getting my emotion down and just understanding that patience pays, right? Patience pays, waiting helps. And this today is literally a testimony, a proof in the pudding that waiting for setups like this will make you profitable, will make you money, right? Because I didn't, like, I'm not just tugging on my house. I didn't take trades yesterday. I was break even 2 days ago because I didn't find a good entry. So obviously I was bummed out. Like, I saw people on social media taking winning trades, but that just wasn't my model. And I waited for my model to happen. So I saw the same exact people who won trades 2 days ago don't not take trades today because it wasn't their model. And it was my model today. I took a trade, I took a fat win, and that's just proof in the pudding. Like, why would you not wait for an A plus setup and take 2, 3, 4, 5 C, B minus setup and just sweat it out? That's gambling. We're not gambling. Well, I mean, gambling, but like, we're mitigating that, right? So we're mitigating gambling to the fullest. So yeah, this is what I want to get through before I end this video. But yeah, other than that, nothing much else. I appreciate you guys for watching. I'll be back tomorrow if I take a trade. But other than that, stay safe, God bless, and I hope you guys have a good rest of your day.